Okay, hi there, guys. How are we going today? Just let me know if you can hear me loud and clear. And we'll get the ball rolling. Who's in today? The usual suspects. I just realised I should have the heater on, to be honest. It's a bit cold in here. Helen, there we go. Lauren. Ant, how are you? And Murray. It is the usual suspect. Alrighty. Well, let's get up and running. Thanks for joining me, and welcome to TradeSetup, the live stream for the 10th of September. Anyone that's new, like I usually say, the top left-hand corner, you'll see us at Twitter. Top right, you can follow us on Facebook, and the bottom right, subscribe to us at TradeSetup AU, capital AU. That's YouTube. Sorry, forgetting that. We'll get rid of that and just our general advice warning there, so you can read that when you get a chance a bit later on. Let's minimise that. Let's get up and racing. So the ASX is actually positive today. So it had I found it interesting. That actually bounced quite well on Friday into the close, finished down slightly, and we've actually opened down and bounced a bit today. Excuse me. So all in all, not a bad day. Everything's sort of hinging on what's happening over in the US with US and China. So what we'll do now, excuse me, is we'll go through the markets as per usual, but what it's going to be is a slightly shorter session, not the hour, probably about 45 minutes or so. So I'll just go through the markets a bit, and then we'll have a quick look at. We've got a couple of alerts going. Just have a look at those, and then we'll open it up. So just put in any charts that you want to look at or any stocks. I know, Laurent, you put some in the forum, so feel free to chuck those in now. And then we'll rip into those and just actually spend some time looking at some charts, some alerts. Some setups potentially, and just go from there. All right, let me minimize that. There's a good chance that it'll just keep going the hour. I can't stop talking sometimes, so no one talks to me at home when I'm by myself. Have to stalk people on the phone. Anyway, let's get into it. So markets on Friday night. Not a big night. The US was down slightly, but they had, again, it's just that same old conflicting message. So um, the US payrolls come out, so that's their employment data, and that came out a little bit stronger. So their labour market's improving. The labour market's getting stronger. I think it's the strongest it's been for a little while, last few months anyway. So that's a very big positive sign for interest rate rises, and it's sort of, I wouldn't say it locks in place, but it's pretty much, I guess most traders are thinking over there, it's near certainty that they're going to raise rates twice more by the end of the year. So that's sort of conflicting to what's happening on the other front with Trump and his battles with tariffs and global markets. Now, he's come out and said, I think the end of the period, I don't know what they call it, the end of the conversation period or something is finished with China and the tariffs, the 200 billion extra tariffs. But he's also come and said there's potential for a quick succession of another 267 billion. So that's pretty much everything that's imported from China into the US is going to get tariffed. So that's obviously, I think, cooled the market into the close as soon as he came out and said that. It's just put a few people on the back foot, a few investors or traders on the back foot. So it's the same old situation where if you're over in the US, you're very concerned about putting on more risk into the market, even though the economy's growing, they're doing well, they're looking to raise rates. It is crimping. Anytime he come out and says or he tweets something, it's crimping it completely. Let's just maximize that. There we go. Should have just changed the screen before. So yeah, you got those. It's the same old headwinds. And so until something happens or they actually negotiate and something comes forward, it's going to be capping, I guess, the global markets. And really, it just means a lot of the plays are shorter term. It's seen us tick over. We couldn't hold on to the gains, obviously being linked to commodities. You got copper continues to, it has bounced a bit on the back of talks, with Canada and was it Mexico? and NAFTA. Potentially that coming good, that tariff's coming good, and potentially over into Europe's next sort of target. I guess they've got to sort something out there. So I think copper actually started to bounce, and it's getting sold off again with more pressure on China. It's really looking like it's going to escalate more than anything else. So we'll just have to see how that goes. What else was there? The bond yields have ticked higher, which is not a bad sign. US bond yields have ticked higher, which means they're just looking at a higher US dollar, which rallied on Friday as well on the numbers. Also, what I guess everyone's following what's happening over in emerging markets. Now, what they were talking about there, and there's going to be that serious concern going forward if they are rate rise, if there are going to be quite a few rate rises, then a higher US dollar is obviously going to affect emerging markets, especially if they've got debt based in US dollars. So that's a big thing, and that's anyone that's sort of got a massive deficit, or whatever country's got a massive deficit, then they're going to have to, obviously, if they're funding that in US dollars, that the cost to actually finance that debt is going to go up with a raising US dollar. So there could be, you've obviously got the trade tariffs, the concerns there. You've got potentially emerging markets which could get hit again. They're worried about the contagion effect into emerging markets. US, if they do, if he goes and slaps another 267 billion tariffs, that's going to affect longer term. That's going to affect US companies as well, especially if they're dealing from overseas. It's going to put the cost of their goods up. So I think all in all, I mean, with all the headwinds, even though they're global, and then even if you got rates going up, it's going to crimp US debt as well. If you're lending money and you're paying more on interest, it's going to make it a bit tougher for growth going forward. So I think there's a fair few factors sort of supporting a bit of a pullback in the US, but it's hanging in there. We'll just have to see how it all goes going forward. So that's the way I see things. Right or wrong. What am I trying to get here? I wanted to get onto the charts. What am I going to use? Let's just go to here. I'll go to display smartless market. That's what I want. Indices. So the Dow, we'll make that a bit thicker. The Dow's, it's potentially got this little minor shoulder there, but the anchor for that trend up is still, it's a minor anchor at 25,608. So it could easily take out these lows at 25,800, say. It's about 100 points off. Trade through it, washed it out, and then bounce. It looks, I mean, that's that typical sort of price action. One little lower high here pops up, lower high, has a deeper correction, but it's all within context to holding that anchor. And if it holds that anchor, even if it retests it, that trend's still technically up. Now, if it breaks through that minor anchor, you've got the longer term anchor down at 25. So overall, it could just be, even the US does have a bit of a pullback, goes into correction, then it could just be that it's a bit of heat coming out of that market in the longer term. But that's the Dow. The broader market S&P is still ticking along nicely. It has corrected off those highs after breaking through the all-time highs, breaking into all-time highs. It's just correcting below, which I think we spoke about that a while ago, which probably expecting something like that, a bit of a correction. But again, that's not looking convincing of a big sell-off. Normally, you get those bigger days, you get those bigger range candles to the downside, sort of that acceleration down, and then maybe a bit of a V-shape, I wouldn't say recovery, but a bit of a bounce. And then if selling starts to come into again, you could get that acceleration down. And that's more the way I see, I guess, fear selling as opposed to just an everyday correction where people are just edging out of the market, probably going back onto the sidelines, putting risk or taking risk off the table. And then if they get a correction, looking to get back in again potentially, and just looking at those short-term gains rather than holding positions longer term. But that's the broader market. It's still, I mean, you look at that, the daily's still heading higher. Go to the longer term, that longer term is still heading higher. Not bad, a bit of a red candle last week, but that's, in context of what's happening, it's nothing serious, bit of heat coming out of that action. It is overextended on the stochastics, but when you look back here, we rallied halfway through that, it was overextended, and it really kicked on, say from just below 26 up to the all-time highs at 28. It's another 200 points on the big S&P. We could also do that around here, just grind sideways, being in overbought territory. and you're getting that market just accelerating up and really starting to get a bit of a move on. FTSE, which is not looking that great. On the they still got Brexit issues. I don't know exactly how it's going over there, but that's still crimping the market a bit over there. I don't think they've come to a deal just yet, and they're getting closer to a Brexit. So we'll see how they go with the EU. But it's the EU did come out and say that they're positive that it was the deal was going to get made with regards to trade between the UK and Europe, but nothing's happened just yet. So they're still trying to nut it out. Last we look at is just the DAX. I mean, that's it's starting to look a bit more tentative. I mean, you've got this longer term on the weekly charts, the lower highs pressing down. We've just broken through this level. So if we can't hold up around pretty much where we are now, the 11,950 mark, I think this could extend a bit lower. And then you get that of this leg up. So this is a leg up since the 2016, got all the way up to about 13,500. We had that one move down. It tried to bounce. It couldn't do that. And then you got that secondary leg down. If we take out that, it could go down, let's bring in another 250 points, somewhere around 11,250, say, before we start to correct there. But that's potentially possible. It's a few hundred points away if that plays out. We'll just have to see what happens there. It's not looking that great either way on the DAX. Don't forget, I think the US, for me, the way I see the US, they're very more cowboys. They're happy to be bullish. You know, a bunch of bulls over there and happy to round this the price higher. But our market, and I remember that before the GFC, it was coming to some resistance levels on the DAX, the FTSE, say, our market, previous highs, wasn't massive resistance. The US went straight through their resistance, and everyone else backed off, and that was pretty much the US was just washing out the highs, and they turned around and rolled over. So it looks like, say the DAX, the FTSE, and especially us, are very tentative type of markets, whereas the US are very bullish. It seems like they're over there. It's either going up, really squeezing people out on the upside, or it turns around and washes them out on the downside. Let's look at our market where we've got the XJO. Let's just get that up here. Had a good weekly correction. Some heat has come out of that market, but if we go, it's not really the weekly we're worried about. That's, we can see that the market's been trending higher, a bit of a pullback, trending higher, and even way back here, I'll draw it up. The anchor hasn't been broken. I'll put that over here actually. That's it. That's the weekly best fit. There we go. And thick. There we go. So looking at the ASX, this is the last thing we're doing, then we'll get into those stocks, guys. Whoops. So that should trend up for me. You've got down here, we had this, that was that two-legged sort of correction we said, and this was the anchor at the time. I think that was the elections back there, and it went boom. This is when Trump was getting in. No one wanted Trump to get in. As soon as he got in, boom, off she goes, off to the races. So it really did. It's just showing that the price section was up. You can see up, pull back, anchor, up, pull back, anchor, up. Two-legged move down, but still it was respecting that anchor and the trend. And then we started lifting from here. We pretty much had this pullback. And for me, that's building the anchor on the way up, pressed up again. We've still respecting that anchor. We've had this, it's probably a bit harder to see, but we've had those sort of contraction lower. That was just cleaning out a few buys, still respecting the weekly anchor. And we're having that move up now. So whether we just pull back here and we turn around, up she goes, and that weekly trend continues up without really correcting, or the daily trend continues up. The daily trend is pretty much broken at the moment. So it's more what are we doing on the weekly basis? And and you can see that this was more or less the day trend up, and it couldn't kick on here, which it should have. And so unless we're going to go sideways price action from here over the weekly charts, or we're just going to bounce around and start to build, or we actually have a decent correction and come back down to sort of that 6,000 mark, which it's more of an anchor here on the weekly, but it's only really a minor anchor. Your major anchor on the weekly basis is right down, say, below 58. There's a few levels we could find some support. That's what I'm looking at, that 6,000 mark at the moment. But that's all based off your weekly chart. So for me, if you go back down to the daily, whoops, you can see that's pretty much cleaning out the last a few months of buying. It probably goes back to about mid-June. So you got July and August. If you bought it up in those 2 months or towards middle of June at least, you've been cleaned out. So if you're buying stocks, well, not everything, but that's just a general thesis. If you're buying in the last few months and just adding to your longer term portfolio, you've probably been cleaned out a bit, or you put under pressure with this most recent move down, and that was a good clean out. So what I do like though is just the way it sort of bounced off that 61 on Friday, and today we're still running up 4 points at the moment, but whether we can hold up here and start to do a bit of work, or it could just pop up and we build a lower high and then it goes down to that 6,000 mark. So it's all really, it's up in the air at the moment, but I still think longer term, the weeklies are looking good. We're in sort of that corrective phase at the moment. So we just have to let it play out, basically. Like I said, we were chatting about it before, and I think it was Lawrence and there's a couple other people, Helen, talking about it in our forum, not having too much risk on the table at the moment until we start either finding a base here, and this starts to build a higher low on the daily bar, charts, and that becomes sort of that weekly base to work from, and see if we can get that weekly. I think it's going to take some time to play out, obviously, and if we've still got China and US issues, it's going to take some time. But yeah, at the moment we're not adding too much risk to this market. We've only got the two positions. What are we up? It's a TR, and they're both positive today. So for us, they're going all right. TR, we've raised a stop. We've taken a partial on that. CDA, we're actually up on that. And we haven't taken a partial just yet. I want to see if potentially if we get the 330 again. If we partial at the moment is 340. But if we get to around 330, we've got a dividend of about 8 cents on that. So it takes it to give or take that 340 mark. Potentially want to start to lock in some gains there. Just got to remember where we have our CDA, where we have our exit. $3. Oh, I always forget where we got in, to be honest. 299. So that we've got a break even at the very minimum on that one there. We just want to see if we can get a chance to take a partial. And it's looking positive today. This is actually with this little pop up through this red candle at 320. We got through 321.5 today. I think that's looking more bullish. It's had this little pullback here, popped up to 330, pulled back, built a higher low at 310, and we're looking like we're potentially going to climb up to 330 again and punch through that high. Just clean that high up, but we'll keep a close eye on that one. Yeah, but that's it for us. We've got Wesfarmers. We're looking for a short. In the last few days, it's actually been quite strong. And the reason really for that short there was it's one, I don't mind having a nibble at the shorts. They're a lot. It's a bit of a tougher gig going short than going long, obviously. But in negative market, it's worthwhile because if this market really starts to turn south and gets really negative, then you're going to find there's going to be a few shorts going to, especially if they're looking weak to start with, prior going into that ASX weakness, they can really kick on. The reason why we're looking for that short through that 50-50 mark, it's not playing out. You get that little kick on, pull back. We're starting to break out of this uptrend or potentially going sideways. We don't know what we're doing just yet. The market hasn't really confirmed either way. We could just chop around, go sideways between 52.50 up here and 50.50. We could just chop around there and start to build again and go up. So that's why we're not just shorting it at market. We'd rather see it confirm, take out these lows, and then we're looking for that as your lower high to press down, potentially to 49, or to see if we can get a bit of a run on. If it gets to 49, starts to bounce, then okay, we'll close out the shorts. If not, it could really start to kick in. If this market is looking really weak or tentative in the ASX, that could start to pay off. We'll have to see how that goes. It's looking like I want to get into it. It's looking strong. A weak that's potentially looking, a long that's looking weak. And the other one was KGM, we're just looking at today. The reason why I don't like this one as such is directors are just selling up. I think the most recent sell was about 40 million. And that's what's caused this to drop from 7 on the open down here. And there could be some more weakness. The overall weekly trend, this big run up, good run, pull back. And that was a good couple of pullbacks. Tried to kick up here, back up to 10. It fell short. So it's getting this resistance around that 10 mark. And that you could look at it as a retest of the highs. You got to 980, so 20 cents short of the highs at $10, or of a lower high. Either way, it's not showing some strength, and then you got this big sell-off down to $3-5. Tried to bounce. We're finding a bit of resistance through that 7 to 750 zone on the weekly. It probably shows up clear on the daily through here, 725 say, before we're potentially starting to sell off. So if we do break through low of 610. I'd happy to have a nibble on the short side and see if we can get down to 5 or below. I mean, because everything for me, we're coming off. This is that stochastics we talked. Sorry, the MACD. It's in the sell zone. It's coming back to the zero line. If that's starting to roll over, that's showing some weakness. That's momentum to the downside. You're in not a bad zone on the stochastics when selling weakness is coming in. We'll just have to see how that plays out. That's pretty much it. All right, let's get into it. So that's 22 minutes. Yeah, I told you I can talk pretty easy. Now, what do we got? First one off the ranks, NWH. Let's go over here. Yeah, look, that's looking more positive than negative at the moment. The weekly chart, just that, which I think it's got a bit ahead of itself. The weeklies are extended to the upside, so actually go through that 205 high, but that's because you want to minimize your risk, and it's preempting a push up through the 215 highs or 214 highs, sorry. So that's probably the way I'd attack it. I'd attack this one, and I wouldn't have my risk much below. What's that? Low 197, saying 195. Not giving it too much risk on that. That's why I'd play that one because definitely that's trending up. You got this little run on here for whatever reason caused that to kick on strong. It's reacted off that sort of 214 highs or 210 highs, reacted lower. It's starting to get held up here. You can see by that, well, this red candle was down. It was getting bought up into the close a bit. Then you got the next day, it was actually sold down and bought up into the close and finished positive. Next red day, again, I'm just saying bought up into the close, but you can see that extension down and then that tail. And again, the next day, it had a bit of a tail. Green down, it's opened down probably and actually finished green for the day. So it's showing some positive signs, which means it could be a bit of a pop up through that 205. And then get a bit of a kick on. Now, if it doesn't, you don't want to throw too much risk at that. And if it doesn't, I'm just looking at that. That's weekly has got me thinking that potentially we're going to have a deeper correction on the weekly down to 180 or so. So if that's the case, you don't want to throw too much risk at that trade from the daily charts because it has been sort of hovering around daily, weekly's overbought. We're getting a bit extended up here. Potentially, there's going to be some people that spent a lot of time building through here, building position, just waiting, bought all on this candle. They have seen it rally up quite hard, quite fast, and then straight away it's starting to show under pressure a bit. That's actually not too bad. I'd be raising my stop if I got in down here too. Like I said, I just don't want to throw current market climate. I wouldn't want to throw too much risk on the table at this one. And if you do get stopped out, and say you bought it, or say you bought it here on this green candle, just start if you're lucky enough to get it in around 180. I'd be happy to get stopped out here, lock in a small gain. And if it gets stopped out and then it turns around and rallies, so be it. I mean, not a bad thing. And in this market, it could easily pull back. You don't know what's going to happen in the global market because when fear drives the market, it comes straight down. It doesn't really wait, retest zones and pop up and give you a second chance. It just goes bang. So that's why I'd be happy just to have a really tight risk profile on this trade. That's one. DDR. So you're right, and Laurent was actually mentioning when he put these up in the forum was you got to be on your guard, which is true. You really do have to be on your guard. Just at the moment, in saying that, we popped up 2 points in the ASX. So, Data. Now that's probably more of that was quite a solid trend up. It's just been, and it's quite conservative too. It's not really getting ahead of itself. Potentially, in saying that, if we do buy it somewhere around here, 310 or so, and it kicks up through the highs at 324 on the weekly charts. If you go to all, and you can see it hasn't pretty much when it come on way back in 2011, it's been up, consolidated through here, retested the lows that started 2016, and then started building that next leg up through the start of 2016 and just continued to grind higher. Now the daily chart is, yeah, I mean, I don't like the way it's just popped up through the high, and that same session, it's finished back below it. If it's, I would wait for a pullback. I would wait to a high low to confirm because we are in that overbought territory. So when you couple that sort of price action through the highs into the all-time highs at 324, you're overbought here. You can't finish above that high. Come into a serious resistance zone or reaction zone. Reaction meaning that sellers might just be waiting till it gets up to the all-time highs, bang, hit it back down, booking their gains potentially from 290 or through this zone through here, and then book some gains. And it's not looking too promising, just that price action with overbought. So for me, if I'm looking to buy it, I want to see this hold another high low. It's simple as that. If you can hold another high low around 305 to 310 and look for a real minor level so you can really minimize that risk on it, and then see if you can push up into the all-time highs above 320. If not, you either take a loss or get out. So again, it's that same sort of scenario. MNY, I'm looking at this one, had a good day today. 4% gainer on that one. So let's get out to the weekly charts. Yeah, again, a lot of them on the weekly are looking a bit extended for me. They're getting ahead of themselves, so you really got to just remember what's happening on the weekly, and not throw too much risk at it. The entry and just ram up through those highs at 222, and see if that can really stretch itself on the daily and the weekly. Get a bit ahead of itself. I want to see it stretch up a bit. Whereas at the moment, you can see that trend up there from mid 2017 has been quite controlled. So if you're going to buy it, you'd rather just pull back to the MAs or to the average, which is probably below 210 for a buying opportunity. It's a lot different to this rally here and this rally here. I'd rather see the market start to get ahead of itself and just book those gains quite quickly, or at least give you in a profitable situation pretty quick. You hate to get in, the market turns, it holds up the levels, but you're against the behind the eight ball from the start. And I guess if you're buying it up here, you probably will be, because it could pull back, build a higher low. You're going to be in the red from the start. But either way, that's the trend is pretty much up on that market. MNY. What was the other one? NWR. NWR. All right. Is that the one? MWR. What do I put? And it's MWR. Come on. There we go. Get the chart up. Let's just go to charts. That's not right. Daily. There we go. MGM Wireless Limited. So the daily, I would rather it pull back, just clean out a few more of these, the late buyers above 240. I wanted to see them clean out, put back on the sidelines, and see if I can get an entry, because again, if you're buying somewhere around here, it starts to show a sign that it's going to kick up, and it gives you an entry, whether it's just the previous day highs, or you can at least honestly put your risk below a level where if you're broken, you're proven wrong. I don't see that just at the moment. I mean, even if you bought it through that, yes, Friday's highs at 314 with your risk just below the lows of that at 290 or just below that, I don't see that as a strong setup. But if that's the case, either way, I'm finding that it's, for me, that's too far ahead of itself. I think that's too far in the MAs on the daily. And if you look at the weekly, and it's just bang. Last 3 weeks have been quite strong. Last week was pretty indecisive. Open and close on the same level, give or take, probably a few cents. What was it? Open at 313, closed at 314. So pretty much at the same level, getting extended. So again, it's that weekly that's a bit ahead of itself. Rather see that pull back, do something like this. This is the price action you're essentially looking for. Well, what I look for anyway. I'd rather see, the heat come out of the market, that head south, and this is what I'd be looking for, is pretty much this. You got that wash out of the highs, that led to some selling, come down, paused here, continued down, started to lift, pull back, perfect entry here, and then you got that, say, through $2, you've gone to $3. Even if you're out now at $3, that's, if I can add up 30%, 50%, 50% rally. So that's great. Off ideal risk of about 20 to 30 cents. So small risk, what's happening there. It's off a higher low after a good washout inside level 2. I love that. And you're sort of, what you're looking for here is that should move up before we started having a macro correction. And you're looking for that secondary move up, which is probably about that, isn't it? 1 to 240. You've got a bit ahead of yourself, 150 to 3. So it's nearly a $2 rally. So it's been quite a good rally up there. Does that make sense there, guys? So again, it's just that weekly chart. It's probably a bit too much heat in there. I'd like to see that come out before I even start to look at it. There you go. What was next? APT. Just got to keep an eye on the time there. Yeah, no, this has been a big one for a lot of traders, and that would have been an ideal entry even after that kicked on quite strong. Look at that. A lot of heat's come out there from that push up through 22, 21, 23, whatever it is. Big pullback to 15 on the daily. I mean, really, your anchor level on the daily trend. I'll get that up. I'll get that in just a second. There we go. So maybe this is your trend up. You've got to see when the market starts doing this, that's quite a bit of, that's quite a strong rally. So you can't, I mean, no one can argue that's unsustainable because whether or not valuations are saying it should be higher, people are people when they want to take profits, especially when the market's looking a bit tentative. So it gets to the point where valuations rules looking great, but then you get to a point where potentially up here above $20 where I wouldn't care what the valuation's saying. I'm looking for the first sign of weakness and I'm bailing to book some gains on that. So that's the way I attack it. So in saying all that, that's your leg up, contraction, spent a good period of time, about a month through here, just consolidating through that zone there. And then you've got your entry. You had your entry, and that's a push up. Oh, I'm going to take that out now, don't I? Let's just clean that up. There we go. Entry through here. You've got your high and low. You know where your risk is, and then boom, up she goes. And that's where that would have been about 15 up to 20. So that's a good handy gain. In saying all that, first green candle today. So whether or not we're going to start to build another higher low around now, I really would want to see the difference between. All right, I'll take a step back. Difference between that rally, you can see this level where it started to build and start to build another support zone or another buying zone was at the highs of this potentially this leg up. Probably the top 1/3 of the move. Well, yeah, give it top 30% of that move. It only corrected about 30%, and that was holding up there. So that's a sign of strength. Whereas this move up, it's pretty much come all the way back down to where it started at around $14, trading around 15. So that's not so much a sign of strength. So for me, if that's the case, I want to see it do more work to build that base and build that higher low. And potentially you can just go sideways here. It might even trade back down to 14, but let the average catch up. Spend a bit of time. It may be, for me, it might be a month or so, a month and a half, where it can build that base. And then you get a sign like this, it starts to lift, pull back, build a higher low, and then buy it on the rise again off a higher low when you've got that confirmation that buyers are stepping into the market rather than wanting to bail. Now, if this just pops back up here in the next couple of days, we see this rally, I would be more inclined to think that's going to be a lower high and you might get that corrective action down. I wouldn't see that this type of V-shape is going to take you straight through the highs. Could be wrong, but if I'm wrong, I'm more than happy to be out of the market and not risk anything on that. Again, I mean, you can see the stochastics come from overbought straight down to oversold. I would just want to see that momentum starting to go from, positive momentum starting to roll over. Of course, it's going to be rolling over after the last few days there, that move off 23. But yeah, I want to see it. It's got to prove itself to me from now because of the pullback. If it was holding up here, around 18, 19, well, sorry, about 19 or 20, holding and doing this type of price action, yeah, that's looking quite strong and it's looking like it should be moving higher again. It's starting to build a nice base to work a new leg up, but instead it's had a good pullback, which is just showing that people wanted to book profits. And you didn't get much opportunity, so they were chasing to book those profits, whether they held them from below 10, 11, 12, or even around here, especially around 14 or so. These sort of people would be the first ones to be squeezed out. And there's quite a few squeezed out by the looks of it. It's just whether or not it can hold up there. All right, does that make sense there, guys? What else we got? What do you think of that, Murray, on APT? Again, with that sort of price action, you want the stock to prove itself. You don't want to be jumping in, supporting everyone else's positive moves, I guess, or You know, just if this starts, if you jump in here and it starts a rally, this could get thumped again because they're text. But if the US come out sometime and go bang, here's another 200 million China on tariffs and another 267, I think it was, billion, sorry. We expect a bit of heat to come out of them. Well, a bit of pressure on the global markets, and you don't really want to be jumping into, not a high probability setup. I mean, if the market was really bullish, and we're in a bullish market, which we're not at the moment, um, or yeah, if it's not a bullish market, you'd really want to take your top-notch setups rather than something that's a lower probability setup with a low probability chance of working out. That's probably okay in a market that's really strong, in a global market that's really, be a bit more relaxed on your setups. Whereas at the moment, I don't think you can. Well, I wouldn't anyway. Now, where was I? What was the next one now? AMI? Mel, AMI. Ooh. So this one, I'm sure we've had. I just can't remember what we did on this. AMI. Oh, that wasn't very nice. 61 to 61. Got in at 61 here. Popped up straight back down to stop us out. So we didn't do we didn't lose on that one, but I think we had it just off this higher low here. Whoops, get rid of that. So with this one, getting a foothold in the US, yeah. I know there's some really good fundamentals behind APT, Murray. I agree with you. It's just fundamentals are not. I think it's the psychology of trading that's probably going to cause that to, I guess, go sideways. I'd be surprised if it just rockets up. There's definitely some good support fundamentally for that, so it's just really looking for a good setup. Now, AMI, that's your trend there. It's just, you can see it's been quite nice. Got ahead of itself here. 1, 2 moves back down to the MAs. We've got a bit ahead of itself, straight back down. So this is not so bad. It's holding that trend, held it here, held it through here. You can see all these, that started about here, wasn't it? So you can see that trend is up there. Now what I'd be looking for here is that you had a little pullback. If we can potentially get up through that high, you can potentially throw your risk below 57.5, a pop up through the high at 65, and then you want to be, at least you want to see a push up through 70. If not, I'm just anxious. Well, I'd be wary that this could contract a bit. I want to see it push up through there before I'd look at enter. Otherwise, if you enter where we are here, we could just chop around. We could even roll over and, give yourself a head and shoulders, head or shoulder here, head, another shoulder here, and roll over and come all the way back down to 27. Who knows what's going to happen? But yeah, this is looking more positive than negative at all. And you're seeing stochastics are in a good spot, potential of some divergence. I don't think that's serious divergence, but the MACD is coming back to that zero line where it could roll back up again like this, roll up here and give a good little bullish move. Yeah, so like I said, I'd want to be seeing it push up through the highs, which are 64, with risk just below, was it 57? That's why I'd be attacking that one at the moment. But definitely it's and it's the fact that it's moved back to the, this support that's coming off there. It could just contract a bit more by contracting us. I'm saying that's your move back down, pop up. We could just be doing this a bit, and then bang. If we do that, that would be great because it means you can minimize your risk a bit more, and you can still take it when the market's on the rise. If we just do this back down, say, and that's this little move down, back down to say 58 before, back down to 58 here. Let me draw that in red or pink. That's the move I'm talking about from here down here, and just contract a little bit more so you can minimize your risk a little bit more, not to take too much risk on the trade. Potentially instead of 65 you're buying with a breakout through there, buying at a 62.5. Just means you're really squeezing that risk profile. All right, now did that help there, Mel? CV talked about it, did nothing. Let's see. That rocketed up, didn't it? That was beautiful. So start of August when we had this. God, I missed that one completely. God, that's a kicker, isn't it? That would have been nice off that high low through here. And that again, that's that price section that I like to see. CUV. There's a few things working in favour here. So you've had that corrective price action down. So you've had one pop up, two, essentially two moves down. There, it was only a minor level. So we're seeing this price action, that macro correction off sort of some lower highs, really squeezing out some of the buys above 10 and starting to lift it here. That was a really minor pullback and it found support just below 12 and then started to lift. So if you bought it, I mean, this is all in hindsight, of course, just below 13 with that little breakout there, you really didn't risk too much. Probably about 15, 60, 70 cents or so. You could have risked on that trade and it just kicked off. I mean, pretty much the next couple of days, you knew you were right. You're on the right side of the market. It was accelerating higher and then you might have taken some off, got squeezed out here, but didn't give you much problems, much headaches at all, really, did it? Looks good. Huh. You seen it on the forum? No, I didn't. Missed that. It looks a cracker, doesn't it? It really, that today's price action was at 16%. What's happened there? Presentation. Is there any other news that's come out? Now it's a September quarterly rebalance. Got a bit of a nudge from US FDA update. That wasn't so good, but it's issued a request for further documentation. So, all right. Obviously, no one cares about that. Request for further documentation. And then the next, obviously, rebalancing. I think it went up, did it? Where did it come from? CUV. So it went into the top 300, did it? Addition. Didn't get kicked out, so it's moved up. So it gave a bit of a lift with the rebalancing portfolios and things. So it looks great. ASX 200, was it? Or 300? I got that wrong. Oh well. All right, there, guys. I'll probably have to call it quits there. We're on about 50. I think I've got through all the stocks we're looking at, but we'll see. Anyway, guys, thanks very much for joining me. I'll have to just call it a day there, make this a bit shorter, and we'll be back in on Thursday again at 12:30. So thanks very much. Enjoy the next couple of days, and we'll see if this market can hold up between now and then. Cheers, guys. Bye-bye.